Hey guys, welcome to the Rapping channel, and today we are gonna be watching a video from Robert Kiyosaki talking about tax loopholes that the rich don't want you to know. So I'm basically gonna be watching along with you guys, give my expert opinion as a business accountant and a registered tax practitioner, and see if this information is actually useful for you in general. Is it useful for South Africans, and as well as it's useful for an international audience, whether whichever country that you come from? Because generally, when it comes to tax rules per country, they are like global principles and global things that actually benefit everybody. But also it's most important to realize that specific tax advice is even more key than general tax advice. So keep that in mind. And remember, this is not a video whereby I'm actually giving you guys advice. So if you need actual consultation, please contact me. As I said, I am a practicing accountant as well as tax practitioner. So if you need specific advice, get in touch with us. Details in the description box, as well as our website and all social media platforms. So let's get to it. Robert Kiyosaki.
Hey guys, welcome to
Millennial
Advanced
Money.
Lessons in Millennial Money, featuring
Okay,
Robert
so this is an
Kiyosaki.
advanced
I'm
lesson.
Alexandra
We'll
Gonzalez.
see.
In this two-part episode, I got a chance to speak with Robert and his
Okay.
tax advisor, Tom Wheelwright.
All right, so we
Tom
have a
has been a
tax advisor
CPA
in the
for
house.
34 years and
So
has an
CPA is the
extensive
same as a
background in
chartered
accounting
accountant
and
in terms
education.
of South African
We're lucky that he
context.
joined us for this important lesson on taxes.
It should be
To
interesting.
all of our subscribers, keep an eye
Let's
out
go.
for the release of part 2 coming in the next few weeks. And if you aren't a
Okay, I'll
subscriber,
look out for
click the
part 2.
button
I
now
wasn't
to get
aware there's a
notified.
part 2.
One of the things Robert and many of the wealthy talk about is how they don't pay taxes. And I asked Robert and Tom to clarify what they mean.
This is one of those global
I want to know,
principles.
and I'm sure all our viewers want to know,
The
how is it that you
rich
guys
pay
don't
less
pay
taxes
taxes?
than
Legally.
Legally.
You can always
owners.
do it as a crook, but
Yeah,
we don't
owners
want
pay
you to do
less
that, right,
taxes
Tom?
That's right.
than
So the question
employees.
is, how do the rich not pay taxes?
Okay.
The
quite
multi-step
definite.
process, let's start with this one first, keep it small,
It's definitely a layered process.
is here you go to school, get a job, you become an employee, but you learn nothing about taxes. Then you become a little entrepreneur, you start your little falafel shop business or whatever you start, right? So that self-employed, small business. And then you have big business, 500 employees or more, or I for investor. So Tom, how much tax do employees pay?
Well, typically if they're making a good salary, and this is, by the way, the same rates around the world, typically it's going to be about 40%.
40%.
Yeah, South Africa, same situation.
Tax cut, did that
That's
change
for the
anything?
highest tax bracket.
Not much. It didn't.
So if you're I'm going to start my own little business, I'm going to start my little pizza shop or my coffee shop, how much do these guys pay?
Well, now it goes up because you're paying both your share of the taxes plus the employer share of the taxes because you've got both sides. So now it goes up as high as 60%.
So when you hear a young person, an old guy like me say, I'm going to start my own business, they don't know anything about taxes, do they?
No, and in fact, this is the place where people get in trouble because over here, the money's being taken out of your paycheck. But here, you're responsible for your taxes. And so what happens is that you go, let's say you're successful with your pizza shop, right? All of a sudden, tax time comes around. Oh no, I've spent all my money and I don't have money to pay the taxes. And people go out of business real fast here.
I have to jump in there. So, effectively, what you're saying. So, you have the quadrant. First quadrant, you're looking at, employees or individuals. And then at the bottom, small business owners, small and medium enterprises. So, based on what they said, think 500 employees or less. And then you have your B, which is your big business, your large enterprises, which is 500 employees and more. And then you have your investor. So, that's the quadrant. So, I'm just going to comment up until where he mentioned the small business conundrum and how the taxes increase. Now, once again, I have a huge problem with that. First one, I'm very happy with it. It's pretty straightforward. It's exactly what happens. In other words, individuals, they pay the highest taxes relatively to income and basically up to 40%. Similar situation in South Africa, could be different anywhere else. That's that, no issue. Then he says at the small business section that now you have a double exposure to tax from an individual perspective now as well as a business owner. Now, this perhaps maybe was true way back in the day, whereby tax regimes per country were not sophisticated to cater to the needs of small businesses. In other words, small businesses are owned by individuals, individuals that are trying to, do their best within a given situation. Now, the reason why I don't agree, they're suggesting that the taxes accumulate, right? But as it is now, if you own a business and you have a job, indeed you'll be taxed twice, but those are two different situations. If you have a business, then your business will generate income and therefore it'll be taxed accordingly. Because remember, you and your business are two separate entities. A person is a natural person and the business is a juristic person. But in tax terms and business terms, legal terms, those are two entities. So you're not taxed twice. So it's not cumulative. And furthermore, the latest tax regimes help or assist small businesses by giving in tax incentives. So there's many tax incentives that help small businesses to actually survive the tax, burdens or the responsibility of observing their tax liabilities. Now, that being said, that does not mean that you should stay away from this, you're doom and gloom. It's a management thing. If you're mismanaging your finances and you're mismanaging how you need to be corresponding with your what you call with your business and cash flow management of how you deal with your taxes, then that's how you get into trouble. But it's not a uniquely small business thing. It also applies in big business. So yeah, just remember that. I'm just saying I'm not agreeing with the accumulation that now you pay up to 60% in taxes as a small business. No, tax regimes are definitely not that harsh to small businesses. If they are harsh, they are harsh in the same way that bigger businesses are being treated. But it's definitely not like we're going to, sort of kill the small business and therefore they experience high, tax, treatment. So yeah, had a little bit of an issue,
Well,
but
it is
let's see
surprising
the
because a lot
rest.
of the millennials do want to start up their own small little business, right? And what they're not aware of is that they're going to be in the 60% tax bracket.
Because taxes are your single largest expense. So if you're going to start your own business, you got to be aware of taxes here. Now, big business has 500 employees or more. How much do they pay?
Typically around the world, about 20%.
South Africa is
Now,
28.
why is it that
2023
big
is going to
business
go down
people
to
pay less than
27%.
small business?
Well, basically, the government wants us to do certain things, and they'll give us incentives if we do them. And what they want out of a big business is they want employment. So they want to create employment because that creates stability in the country. Jobs, right? And so the more jobs you create, actually the more tax benefit you get.
Well, look at Amazon right now. They're looking at moving their company.
Okay, before I allow them to move, you see, this is why I had a problem with what they were saying with small businesses. Are you trying to tell me a small business that makes 499 jobs is not is not positively contributing towards the economy? I mean, that's literally 499 households that small business is assisting to help provide livelihoods to. So, as I'm saying, the way they are positioning small businesses, it's not correct. Small businesses enjoy the same tax benefits as big businesses. The difference is big business has more resources to sort of apply those benefits at the higher rate of return. So in other words, big business has more resources to benefit even more than small businesses do benefit from these tax sort of strategies that could be arise. So once again, in South Africa, small business and big business are taxed exactly the same. There is no difference. So the only thing I could try to say that they were trying to mean when they talk about small business is maybe like informal traders. Those are the type of people that get taxed as individuals, even though they're not employees. So if you have an informal business, then you're not going to necessarily pay 60% because remember, your income needs to be that high in order to be taxed that to the highest degree. But in this case, what I'm trying to say is that you will not be benefiting from a lower tax break or tax application, because business is that 20 to whatever percentage that is applicable in your country. You will not be benefited from that. But then again, it's not necessarily a benefit. It's really more of a perspective thing. Let me say it this way. An individual can own a small business. An individual can also own a big business. So small business, big business, what I'm trying to say, there's no difference. So this is more like three things that have been discussed. That was employees, business, and investor. Not small business, then big business. There's no fundamental difference from a tax perspective. But in terms of resource availability and how you can explore tax benefits, that's where the difference is.
How many tax benefits do you think they're getting?
Oh my heavens, they pay very, very little tax. Amazon does, and they pay, you talk about all those different kinds of taxes. Not only do they pay very little income tax, but they're also paying very little sales tax and employment taxes and all those others, because they're getting benefits from multiple types of government: the federal government, the state government, the city government.
Is that how Elon Musk started his battery factory in Nevada?
Well, yeah, I mean, Elon Musk, he gets huge research and development tax benefits, which, by the way, that's a tax benefit that is available in most countries more than the U.S.
Right. So if you're going
Okay, before they go back, I like what they've mentioned. Definitely great talking point. So now they're trying to make business cases in terms of Amazon as well as Elon Musk and his batteries business and so forth. So they're talking about tax benefits. As I previously mentioned, tax benefits in South Africa, especially, are generally available to small and business, small and big business alike. So there's no differentiation. The only difference is the level at which you're able to participate, the amount of resources that you have in order to participate. Now, they talk about the type of benefits, or how Amazon and such companies are getting or paying very little tax in terms of income tax. Remember, income tax is a tax that you pay based on the money, the money that you make within a financial year. That's income tax, right? And then you have what you call sales tax. In South Africa, we call that VAT, or value added tax. Now, he says that they are paying very little. I disagree, particularly on the value added tax. You see, income tax, I can understand. There's argument, it's all about structuring and so forth. But it comes to value added tax. Now, this is why I fundamentally disagree. Value added tax, if you are making a profit, you will pay value added tax. That's that. Now, if you are saying, as they are not, if they are saying that they pay very little value added tax, then the only way that you can do that is you are clearly using credit to fund your business rapidly. And this is not just the normal way of using credit. You're literally using credit in such a way that you are deferring your repayment, but enjoying the benefits of receiving income now, and then using that deferred payment. So in other words, that accrual expense, right? So you have what you call an accrual expense and an actual expense. An actual expense is an expense that you pay right now. So in other words, I pay for this mouse and I receive it. That's a cash, payment. It's an expense of that. Now, accrual expense is I receive this now, but I pay later. Fundamentally, that's credit. Now, how does this affect your VAT? Now, when it comes to VAT, you can claim what we call VAT output. Well, you don't claim VAT output, you pay VAT output. So VAT output is the sales that you make. Then there's the applicable VAT rate is charged, and then you have what you call VAT input, which is the things that you pay for. Now, if you are using more credit, your bottom line will reflect a profit, but because you're paying later, that's why you're getting that profit. Now, in terms of VAT, you have to declare it more often than you would your income tax. Your income tax is once a year, whereas your VAT, it's either twice to 12 times a year. Now, whichever one is applicable, every time you declare your VAT, now remember, you're going to be paying later, but you're receiving your goods now. So therefore, there is a VAT that you can claim, because you can decide to claim your VAT now or later. So the more you do, that's what I'm saying. This thing is not supposed to be, done rapidly. But if you do it rapidly, then it can get to a point where you pay very little what you call very little sales tax or VAT. But it's not as easy as they're saying it, because once again, the main principle when it comes to VAT or sales tax that I say to most of my clients is that the more money you make, you will pay VAT. You can reduce it. You can pay 5% or 50% of it. Well, and I'm saying that, I'm saying, for example, if VAT is charged at 15%, you'll maybe pay 5%. You'll pay 10%. You won't pay 15%. You won't pay 50% at all, because you can claim against that 15% that they want you to pay. You can claim against it and pay as little as possible. But when you're doing that, in terms of the business picture, the overall business picture, you are actually operating at either a loss, or you're not making the profit that you are deemed to be making. And for me, these businesses that they mentioned, they are making good profits. It might not be the most amazing, but they are definitely making good profits, because they have shareholders that they need to please and so forth. So I find it hard to believe that if you're going to advocate for paying less sales tax or VAT, you're actually saying that you want to make less money as a business, and that does not make sense.
Going to stay small. I mean, it's a good place to start, but you're going to really want to come over here eventually.
True.
And then the professional investors. See, these guys are passive. These guys invest in stocks, bonds, mutual funds. They save money. They're passive guys. They pay the highest taxes. But how much does a professional investor, like this is like Shark Tank,
Okay.
how much do
So
those guys pay?
so they're talking a
they
difference
can pay
between a
as little as
trader and an
0%.
investor.
They can actually completely eliminate their tax.
One of the biggest misconceptions.
Okay, cool. They didn't really go into it, but I'll expand on it. So they talk about an investor. So an investor is someone that invests for the long term or invests for short term. But the point is, you are not actively being involved in those business as an executive and so forth, or employee, whatever the case. You're just putting money towards that business, and then you're waiting for it to give you some sort of a return. Now, they sort of mentioned the difference between passive investors, when it is the employee or a small business owner who becomes an investor in something else. I don't know why they specified that, because once again, those benefits can apply to those people, whereas a professional investor, so now as somebody that is investing as a business or as a career, they enjoy the full benefits. Look, technically that is true, but I have a challenge of them saying you can't get zero tax on your investment if you are a employee or someone that's investing, a retail investor, or you are a small business owner who has money to invest. Look, when it comes to investing, there's a whole lot of benefits. Why? Generally, tax regimes require, or they wish they could have as many investors as possible, because investors, what do? They take their disposable money after it has paid taxes and all sorts of things. It's gone through the system. It's just money that's sitting there. And you want to give investors many tax benefits. Why? Because you want them to take that money, and you're telling them, please invest it in the economy, invest it in companies that are listed, invest it in small business, invest it any way possible. Because what are you doing? You're helping the money to move. And that's what I'm saying. Any investor, if they know what they're doing, they can get 0% of their tax. Because why? Governments want investors to spend money, because when they spend money, it's good for the economy. The money is circulating. And then they're telling the investor, get rich while investing. So therefore, we will not penalize you from paying taxes, because the more you invest, the more the companies that you invest to are able to operate, the more taxes they can pay, because they are being funded. And you are also taking off the burden from governments to fund businesses, because the very same people that government is getting taxes from, they are also funding the businesses. So what does that have? What does that do? The government is getting free money all around. So that's what I'm saying. They didn't explain it in the technical terms that I was hoping for. Maybe they will in the second part of the video. But all I'm just saying is all investors can get 0%, or they can achieve 0% taxes payable on their investments, because tax regimes generally want exactly that, or exactly they want investors to investing in the economy. So that's the incentive for everyone.
Conceptions out there regarding taxes is that tax breaks are only given to the wealthy. Robert had a great answer for this. Let's take a listen.
Okay.
Well, I think this is actually a very interesting topic for our audience because of the fact that a lot of the people complain that the only people who get tax benefits are the wealthy. And I think it's also because, like you said, it's a series of incentives of what the government wants you to do.
Yeah, and that's the mistake. It's not the wealthy. You see a lot of wealthy people here. You know, if let's say I'm a CEO of a company, I'm making $1 million a year, I still pay 40% tax. And I could be a doctor or a lawyer, and I could make $1 million a year. They're still paying 60% in tax. See, it's not what you do; it's your mindset. And
It's not true, but okay.
So this is my poor dad. This is my rich dad. So which one do you want to be? You know.
I don't like that. You see, for me personally, right? I am on the poor dad side of the business, and many people would be shocked. The reason being is, look, I've never worked for anyone. I'm a professional. I work for myself and have businesses that I generate income from. Now, if that's still the poor dad, rich dad, and I'm on the poor dad side of things, it doesn't make sense if you understand what he's saying. Because the rich dad is supposed to be the one who, creates business, uses people's monies, leverage. He's fully invested into business and entrepreneurship and has a certain focus. I believe I'm that guy, but I digress. The main thing I'm trying to say is that the way they're putting it is not to say if you're a small business, you are poor or you have the poor thinking mentality. Look, small businesses have the same or similar attributes as a big business. The only difference is resources. The amount of resources you have will determine how effective you can operate. Now, I'm using myself as an example to show that, guys, I don't have 500 employees. In fact, I have 2 employees at most, but then I have subcontractors. I have businesses that I partner with and so forth. That's leverage. Now, I pay the minimum amount of taxes. I advise clients that make way more money than myself, and they have more and more employees than myself, and they are able to pay zero taxes when it comes to their income tax because there are benefits that governments or tax collectors are giving to companies for the mere fact that they exist, they're getting those benefits. And the only thing is, you just have to, go through the regulatory processes to qualify for these tax breaks. So you should not look at this and get the feeling that because you're on this side, you are just, failing or doing bad or whatever the case may be. So I feel like that's just something that, yeah, I don't know how to even explain what they're trying to say, but yeah, it's not the case. You have access to tax benefits. You just need a professional like myself to assist you for your particular case. But remember, it depends on the resources that you have. If you are not at a level that some of these tax breaks don't make sense to you, you don't benefit. But there's definitely a tax benefit that goes to each and every taxpayer.
In this clip, Tom goes on to explain the difference between the rich and the poor.
Okay.
It's the difference between the rich and the poor is how do they use taxes to their benefit? If you look over here, you ask about the big business, well, that's employment, right? But investors, why do professional investors get benefits? Well, because the government wants housing, they want commercial projects built, they want energy done, that's an Elon Musk,
They
right?
want food.
They want technology, they want food, agriculture. So all of those things that the government's trying to incentivize people to put their money someplace, they really want them to put it over here. And if you put it over here, these are pretty much consumers. These are consuming the money. And the government, what they really want is they want all the producers over here.
Yeah. I had a friend who started off.
So they're judging the
I
fact
think his
that
grandma gave him 10
most small
chickens,
business owners
and
and
they were
employees are
producing
just
10 eggs a
consumers.
day.
It's an
By the time
assumption.
he
It's
retired,
not
he was
technically wrong, but
producing
I wouldn't do
10
that.
million eggs a day. Did he get tax breaks for that?
An enormous tax breaks because every dollar you reinvest in your business, you get a tax break for.
Come on, guys. Every dollar that you invest, you get a tax break. Does not go back to what I said. So long as you're an investor, you get a tax break. So does that matter whether you're professional, retail, whatever the case that they're trying to build? No, it doesn't. So long as you invest, there is a tax break available. It's in the details, guys.
Robert then goes into another lesson from his rich dad. And for all of you entrepreneurs, you might want to pay attention. Let's see what he said.
Okay,
So the other thing
entrepreneurs.
that my rich dad taught me, which is this here, is since I was not a very good student in school, he just says, remember the McDonald's formula. The
Okay.
reason I talk about this, McDonald's formula, this is Ray Kroc. If you saw the movie Founder, he says it right in the movie. The purpose of McDonald's business is not hamburgers. Everybody thinks it's hamburgers. McDonald's business is to buy real estate. You see, a hamburger stand produces so much income, it can afford the real estate. Well, the average guy, graduating from school with their MBA or PhD, they go, well, how come I can't do that? Well, because you're over here. So McDonald's did this here. So they had their business, which is hamburgers, bought their real estate. So today, McDonald's owns more real estate than the Catholic Church. Does the Catholic Church get tax breaks too?
Enormous tax breaks. They don't pay tax on any of their income.
Yeah. So so McDonald's competed with the Catholic.
That was a bit of a backfire on Robert Kiyosaki there. But you see, the problem is they're trying to extend the points that they are, trying to make to show you guys that if you're clever with your business, you can benefit to such an extent that is ridiculous. And, so that's why I'll be very careful about some of the things that they're saying because it's all about sensationalism at the end of the day. But I appreciate that they're trying to simplify certain things. So to really extend on the point that he's saying, this is a question of business models and structuring. He uses McDonald's because we are used to seeing McDonald's as, they make and sell burgers, milkshakes, fries, and all the lot. But at the end of the day, core business, the thing that makes them generate the highest value in the business is them actually investing or buying real estate, right? So the more burger joints that they create, the more square miles that they're able to occupy, that helps their business to make more burgers and effectively increase their income, and therefore typically the income tax will be raised. But remember now, if you are at that level of a business whereby you're buying property, that's investment. You're investing in the land, you're developing that land. So that's creating a conducive environment for other businesses. So that is what the government is saying. We're very happy. We will support you, but with tax breaks, so long as you develop in the land. And then as you develop the land, you are making more jobs. You're creating more jobs as you get more land, you're building more McDonald's, and then what's happening? You're creating employment. Once again, government is very happy about that. Once again, this is pure business modeling. Now, at this point, in McDonald's is investing in itself. Once again, an investor is anyone that puts money into something that's going to generate or produce something, within a specific time period. Now, when that is done, it does not matter who you're investing in or what you're investing in. So long as the benefits are there and they are aligning with government objectives, you will get a tax break. Now, when it comes to the church is an NPO. NPOs generally, or NPO meaning non-profit organization or non-government organization. So a non-NGO, a non-government organization, is an organization that does similar functions that the government would do, but they are doing it, right? So anything to help the government will constitute into a tax break.
Catholic Church by just building hamburgers and buying real estate. Any comments on that, Tom?
Well, the great thing is you don't have to be huge to do this, right? I mean, you can do it with your startup business, your online business, right? You guys are doing all those online businesses.
Startups, right?
Do it from here to here.
The tax law is ultimately fair because you don't have to be huge in order to take advantage.
How long did it take to get there? 8 minutes. And I said at the beginning, right? Okay.
You do have to have the financial education, because you have to behave like these people. If you do what these people do, you get the same tax benefits that they get. The challenge that most people have here is that they don't have any financial education. And so they do everything as if they were up here, and that just gets them in trouble, because these guys, that's not where the tax law is built. The tax law is built for these guys over here.
See, lack of knowledge.
Next, Robert talks about using debt to your advantage. Most people think all debt is bad, but little do they know it offers a huge tax benefit. Tom and Robert explain.
obviously they're going into the topic, but I just want to remind you and show you guys. See how I discussed everything straightforwardly in the beginning. And that's the thing about people like this. They have found ways to turn financial information into stories. They're trying to make it palatable, entertaining, convincing, persuasive, and so forth. So that's why a lot of professionals in the finance industry they struggle because it's all about technical terms and trying to convince you guys what is right and so forth. So it's very, very important to realize that hey, things can be simplified, but get to the point. So I know it's a bit of a struggle because already this video is pretty long, but it is what it is.
So I'm going to throw in one more thing. Again, this takes financial education. The number one asset I can use is debt. So the reason I like this place here, and get this. So let's say I have, this is the McDonald's hamburger formula here. So I have $1 from my hamburger business plus $5 of debt. So it gives me $6. What does that mean to you, Tom?
Well, it means you're not going to pay very much tax, and it also means you're going to make a lot more money, because what debt does is it accelerates. On the plus side, if you know what you're doing, if you got the financial education, right? On the plus side, it accelerates both your income, but it also accelerates your tax benefit.
Yeah, so this is my formula.
That's the
here.
purpose
This is
of debt. I
McDonald's
mentioned
formula.
that when we were talking
Let's
about the
add Rich
sales
Dad
tax
Company.
or
I run a
value
Rich
added
Dad
tax.
Company. But Kim and I buy real estate with Ken McElroy and with Tom's guidance. We do all this because we can leverage up with debt, but good debt, debt that we don't have to pay for. These guys have bad debt, like their house, their car payments, student loans, really horrible debt. But there's good debt on this side. But you can do the same thing this way if you want to.
You see, you want to talk about bad debt, horrible debt, and the examples that he used. They just said it previously. For you to get to the big side of things, you need to start here. And for you to now call that bad debt, it's most like, I ate that wonderful piece of steak. And after enjoying it and enjoying the experience of having it, now I'm going to come and tell the next person, that, don't go there. It's horrible. But now the issue is the experience is going to be denied to everybody. They're not going to be better for it by going through the process. And then once they're at the position that you're in, they can make their own decision whether it was good or bad. That's the problem. And it's not about the experience. What it's about is you start somewhere. Don't discourage people from starting simply because you're enlightened. Because it's like a student that's in matric or grade 12 telling a student in grade 7 that whatever that they're learning is useless. Like, no, it's not useless. For their journey, where they are, it's important for them to progress to where you are. So that's me explaining that in analogical terms. But once again, bad debt, guys, is debt you can't afford. That's the bad debt. If you are getting debt to buy clothes, to buy things that don't matter in your life, that's bad debt. It's not having a home loan. A home loan is good debt because you have a place to stay, you have a place to give yourself an opportunity to have a financial future. Whereby if you have a place to stay, you're able to, you know, to live well enough to start businesses, to start something, to do something with your life. So that cannot be categorized as a bad debt. But now if you buy a house that you can't afford, you can't pay. Now the very same thing that you are fighting for is destroying you. That's bad debt. So bad debt is not necessarily what you're buying or what you have bought or how you've gotten it in terms of home loan, whatever the case may be. It's the decision making process that you took and you came with an eventual decision to say you're going to do this, but it's not playing towards your favor. In fact, it's playing to your destruction. That's bad debt.
Thank you guys so much for joining us on this video, and I hope you guys loved it just as much as I did.
Okay, I guess that's that, right? So yeah, guys, I mean, what's important is for you guys to, well, as I react to this video, I'm just trying to remove the sensational parts and to really come home with the idea of, hey, if somebody's saying to you there are tax benefits that the rich are enjoying, what is it? Who is the rich? It's all about knowing what is more important than the things that are sort of like coloring things around. So once again, to summarize everything, tax benefits are truly available to everyone. The difference is what is your level of engagement? what are you doing within your business space, your career space, whatever the case may be. Just because you're an employee does not mean you get denied access to certain things. Remember, governments and tax regimes are out there to make sure that everybody is participating in the economy. And when you participate in the economy, you are investing in the economy. When the economy is well invested, there's spoils, there is income that is being made, and that income feeds the government because now they can charge income tax, they can charge sales tax. That income feeds you, it feeds everyone because you're making profits, you're making money, commissions, salaries, all sorts of things. And the more that real turns, the better for everyone. And government's job is there to make sure when we talk about a conducive environment, government must make the environment conducive. And one way to make environment conducive is to give tax breaks. Because if a government sole responsibility is to focus on the type of tax breaks that they're making, then that economy is good. Because the moment the government has to start building infrastructure, has to take responsibility of many aspects of our livelihood, that's where government expenditure is increasing. Now, instead of enjoying tax breaks, now we have to deal with the fact that government has to spend so much, and therefore they need more than they need. They need to collect more because now that's going to be hitting us. Now we're going to be, we're going to be in situations where we're paying way too much tax than necessary. So that's why for us to make sure we benefit, we must make sure that we participate, and therefore the government doesn't have to pull much resources from its citizens, and everything is being handled. So let's be responsible tax citizens by being productive and also contacting a tax professional like break planning to assist with whatever tax matters or tax advice that can help you, because at the end of we did discover that it's the lack of knowledge more than anything, not you're part of that quadrant and so forth, that makes you suffer in terms of tax and financial management. So remember that, guys. So yeah, much appreciated. Let me know in the comment section what you think. Also, if you want me to react to any type of video, you can basically check out our social media or even in the comment section. Let me know what you want me to react to, and I'll make sure I get back to you guys on it. So yeah, guys, thanks for watching. Please remember to subscribe, like, and share this video, and see you on the next one.